Did you also forecast 8%?
Well,
I mean, this is quite a shocker, I think, for many economists out there.
Indeed, most definitely. We keep on getting it wrong, it seems.
Yeah.
We had it wrong on the CPI numbers. It came out much lower than what we've expected. The PPI was a really big surprise.
Why are we getting it wrong?
I think we underestimate the effect of the currency. And of course, everybody is saying that we have to have a weaker currency for our exporters, but look at the wonderful benefits for having a strong currency as well. In fact, the important component, if you look at the PPI, break it down a little bit, increase at the rate of less than 1%. The exported component accelerated a little bit, and if you put the two together, an increase of 6.8%, significantly lower than what the market expected, and certainly much lower than what we've expected as well.
And CPI sitting at a 5-year low.
CPI at 3.2%, that is very close to the bottom end of the targeted range of the Reserve Bank. And then, of course, the next question, what's the Reserve Bank going to do about this? And I won't be so, of course, the Reserve Bank is going to cut. I'm pretty sure about this. But this sort of PPI number, and PPI is usually a leading indicator for CPI.
Because the month-on-month number, it contracted by 4.6% around
That's
there,
quite a
which
lot,
is quite
and
a big
that's
contraction.
significant. That is significant.
And that is really, I mean, what kind of percentage does the Rand play?
Well, it's
when
very
it comes
difficult to
PPI
tell you
and
the
CPI?
Rand plays X%, but a rough calculation is that the Rand probably had an impact of around about 30% directly on the PPI numbers. And then, of course, there's a second round effect of the stronger Rand on PPI numbers. Remember, everything affects everything else in the economy. So the strong Rand filters through to all other variables in the economy as well. So a strong Rand is not only bad news, strong Rand most definitely good news. And I think the Reserve Bank is going to cut because the Rand is quite strong.
Well, let's zoom into some of the sectors that are going to be a problem down the line. Looking at administered prices, because that is what most economists have been talking about, that could be an issue going.
In fact, that was part of the reason why we expected the PPI number around about 8%, because we expected an increase in the electricity component in excess of 20%. It came in at an increase around about 17% lower than what we've expected. Of course, there will be a knock-on effect of this electricity prices over the next couple of months again, but the impact thereof is lower than what we've expected. Still, we have to go and dig into the numbers and see what the reason is for that. But the electricity price increases in the PPI numbers was lower than what we've expected, so that's one. Another important reason is that agricultural prices also increased at a much slower rate. And of course, the farmers are complaining about this, but it's good for things like, for example, food prices and so going forward. And that, of course, will impact on CPI, or consumer prices, and where food price increases is also on a very low side.
Well, you know, the CPI is sitting at 3.2%, 6.8% for CPI, for PPI. Do you think we can sustain these levels? I mean,
well,
does it really
I
depend
must say,
on the Rand?
I'm very surprised up to now. I mean, we have been wrong on the inflationary pressures in the economy. Clearly, inflationary pressures are much less than what we've expected. I do think we will reach the bottom somewhere. I won't be surprised if we see inflation slowly start picking up over the next couple of months, perhaps less than what we thought originally. This is probably not sustainable. We are going to see an increase in inflationary pressures in the economy over the next couple of months, but clearly much less than what we thought originally.
Could we go below that 3% target level?
It's not impossible. It's most definitely not impossible. If we get a PPI, if we get it wrong with 1 full % on PPI, we're probably going to get it wrong on CPI again. So it's not impossible for CPI to drop below 3%, and that's going to create a very difficult situation for the governor at the Reserve Bank, because she's been saying, and the governors all over the governors at central banks have been saying that inflation has to be within a certain band, and now we have inflation actually falling below our band or close to that. So the Reserve Bank will be in a very tight spot here.
Interest rate cuts.
Yes, I think so.
50 basis points?
I would say so. I don't think it's a good thing for the Reserve Bank to do more than 50 basis points. We've been getting used to 50 basis points. Stick to that, and always warn the market that if the inflationary pressures start building up again in the economy, we have to start raising interest rates again. But for now, I'm pretty convinced that the Reserve Bank is going to cut interest rates again.
Do you think we could have another 2 rounds of interest rate cuts, so 50 basis points now and perhaps another one early next year?
It's not impossible. I don't think it will be the right thing to do. I think by early next year, we would have seen that inflation will start picking up again. So my money is on another 50 basis points, but of course, they never can be sure, because inflationary pressures are, I had it wrong in the last couple of months, so I won't be surprised if inflation comes in even lower. But at this stage, I'm pretty sure another rate cut, depending on what's going to happen to inflation.
All right, let's touch on the medium-term budget policy statement. And I think most investors, you know, looking at this, and it's also interesting, I mean, just looking at it from a political front, I mean, you know, the newspapers today saying that, you know, the governor and of course the finance minister seems to have pleased its, the opposition parties as opposed to its allies, which I think is quite interesting. Just your view on the speech.
The run-up to the speech of the minister, I think there was huge expectations. I think there was a lot of political pressure. In fact, we saw it at their own economic policy document not too long ago. We've got this new growth plan. We don't know really what it entails, but we've got a new growth plan. We have huge unemployment. So I think the expectations certainly were there that the Minister of Finance is going to do something big, do something radical. Unfortunately, he did not. This was just business as usual. The Minister of Finance, and remember, the medium-term budget...
When you say something big and something radical, did you expect more spending?
No, I didn't expect him to do much, but I think the expectations out there certainly was. Remember, the platform was not right to make significant changes to policy. The platform to make changes to significant changes to policy is in the February budget. The platform here, or what he's supposed to be doing here, is just to update it on what's been going on state finances. And by the way, state finances are doing very, very well, surprisingly so. But the expectations certainly were there. And I think the Minister played a very nice political game.
30 billion rand in tax revenue overrun, which is fantastic news at the end of the day, but this money is going to be given into the hands of the Reserve Bank to try and build foreign reserves.
The money is going to be neutralized, to use the right word.
You're using the word destroy a little earlier off air.
In a way. Remember, the Reserve Bank can print money. They can create and destroy money because that's the Reserve Bank. But remember, when the Reserve Bank buys dollars, they put rands back into the system. They have to drain these rands back. And in order to drain these rands back out of the system, they usually sell some sort of instrument into the market. Now, what the Reserve Bank is going to do, in fact, they've been doing it for years now. They're going to buy dollars, and instead of selling something into the market to drain liquidity out of the market again, they simply go to the Reserve, or to the Minister of Finance's tax and loan accounts at the commercial banks, and they take the money away from the tax and loan accounts out of the market, and by doing that, they drain it. It's a good idea. It's cheaper than the other way, the normal way. It's cheaper than that because the interest payments differential is smaller. So firstly, it's cheaper. The downside to this is that you mix fiscal and monetary policy. You can't really calculate the cost of monetary policy or the cost of fiscal policy. Another good, this is actually quite a clever ploy of the Minister of Finance. He's got this additional more than 30 billion rand available now. And of course, there's a lot of pressure on him, a lot of political pressure on him to spend this money. So he tries to get rid of this extra money. And a very clever way of getting rid of this extra money, give it to the Reserve Bank to do something about the strong rand.
But surely we could have, deployed this money elsewhere into education,
most definitely.
Health, NHI. Government keeps talking about National Health Insurance Plan. Why didn't it go into that?
You sound like a real minister. Of course, that's what all the ministers are going to say. We want the money to spend on education and health services and the like, and we spend huge amounts of money on education already. And that's not the problem. Money is certainly not the problem. What we need to do, we have to spend the money much more wisely. South Africa's expenditure on education is very high.
Is this the wisest way to spend money, though, Dawie, at this point in time, that 30 billion rand? Is that the wisest way?
Well, I don't think we should be spending it on anything else. We spend huge amounts of money on all sorts of things already. If we want to spend more money, we should be spending it on capital or infrastructural investment. And in fact, the Minister of Finance yesterday alluded to a possible increase, a huge increase, further increase on capital expenditure in South Africa.
And of course, alluding to the fact that government spending is going to actually come down.
As relative to GDP, yes, there was a bit of a surprise there. And that's another sign that the Minister of Finance is not a populist Minister of Finance. He's a responsible, conservative Minister of Finance. He wants to spend more, for example, on the NHI, new health insurance or plan in South Africa, but he made it very clear that we have to get the money somewhere before we can commit money.
We've got growth sitting at around 3% for this year. This is what they were talking about, and around 4.3% for 2013. Very far away from the close to 7% required to build 5 million jobs in the next 10 years. Yeah. I mean, how are they going to bridge this gap?
Well, what we need to do, remember, and I don't think job creation should be priority number one. Economic growth must be priority number one, and jobs will follow. So the emphasis must be...
Well, you need the economic growth to create jobs.
And I think listening to the Minister of Finance yesterday, he made all the right political noises about unemployment, and of course that is right. But his emphasis was much more on economic growth, unlike the other ministers. And that is what a conservative Minister of Finance is supposed to be saying. We need some adjustments, some structural adjustments in the South African economy before we can get to economic growth of 6 or 7%, which we actually do need before we can do anything about unemployment.
So it's quite interesting because you've got the G20 ministers pledging not to depreciate their currency. Here we are, moving towards that. It's quite an interesting scenario that's playing out. You've got the rand above 7 to the US dollar. You've got talk of quantitative easing. Some are concerned that it's not going to be aggressive enough, that we'll only see a couple of $100 billion pumped into the US economy, which I also find quite fascinating. But the question is, where's the rand going to go from here now? I mean, you've got all this talk about trying to control the rand. So some was calling 650 not too long
no,
ago.
yeah, 620 I think somebody called it. I don't think it's going to go there. Well, first let's just chat a little bit about the US dollar. I think an interesting thing is that the Fed yesterday asked for the market makers, the state debt market makers in the United States to give the Fed an estimate on how much the QE is going to be. Actually,
500 billion to 1 trillion.
But the Fed is saying we don't know really what to do. What do you want? So, and I think because of that, the dollar is getting a little bit stronger, and that's a part of the reason why the rand is getting a little bit weaker. My suspicion on the rand is, depending what happens to the US dollar, but my suspicion is that the rand will remain at these sort of levels for the next couple of months at least, and thereafter we could see a small, slight gradual depreciation in the value of the currency. But my guess is right about 7, perhaps 720, somewhere there, and perhaps even for quite a long time.